What's going on, Savage Life family? Today I'm going to be answering some questions, explaining to you how the presidential election isn't going to affect the market as much as you think, and I'm going to be showing you why. Before we do, you know the vibes, go ahead and smash that like, subscribe, and let's move on to this intro before we get started. Okay, so the S&P 500 is up about 5% since the end of July. And of course, Trump is claiming credit for that gain and encouraging investors that voting for him is the right choice due to the regulatory burdens that he will be lifting from corporations and wealthy investors. But I like to go ahead and backtrack and look at history. I want to explain to you that exactly isn't the truth. Now I got open a SPY ETF. I have the 5-year graph right now, and if we go back to 2016 when he was reigned into office, back around December, as you can see, the stocks near the end of November all the way till January, you can see the S&P 500 rose about 3%, rating in Donald Trump as a president. Typically, markets are insanely bullish for the hype of the election, and lately there has been a lot more retail investors due to the simplicity of investing itself, and it has gained a lot of interest of a lot of individuals due to being stuck at home, finding other sources of income. So what will affect the stock market more than the presidential election is actually the Senate races, because the stimulus has to be passed in order for this terrible economy to recover. The current market is not reflecting the economy due to the hype of the stimulus, but the stimulus is yet to pass because it can't get passed through the Senate. It hasn't even reached the president yet. And yes, I'm speaking regarding the second stimulus, not the first one that passed already. We're going to need a second stimulus in order for this market not to tank completely. So if all goes well, whoever gets elected into the office, as long as they sign off on the stimulus as soon as it gets to them, whether if it's Biden or Trump, the market will continue to rise as usual. Now, history likes to repeat itself, and that's especially true with the stock market. So if we look at the S&P 500, in the 60 days following 7 of the past 10 US presidential elections, 7 of the 10, yes, 70%, ladies and gentlemen, the S&P rose 4 out of the past 6 elections by an average of 0.7%. Most recently, the S&P jumped 6.4 in the 60 days following the 2016 election. So in all, the market typically goes up due to the hype, regardless of which candidate is elected to office. Some of you are afraid that if Biden gets elected to office, it would be bad for stocks due to corporate taxes rising, but that won't have as much of a negative effect as the Senate not passing the stimulus. So there you have it, ladies and gentlemen. There's nothing to be afraid of. Just keep your eye out on this bill being passed. Of course, Trump is not going to sign off on the bill unless he is reelected. All his efforts are focused on campaigning as of now. So you guys let me know what you think of this election, how it has been affecting your portfolio so far. If you guys enjoyed this video, smash that like, subscribe, and comment down below. Later.